me to this first lesson of getting started in technical analysis. This is a course based on different lessons and with one goal that is to let you know technical analysis. So the idea is that you are gonna get confident with technical analysis tools and a little bit of fundamental analysis, so you can start investing by yourself in any of the most common used traded markets. So let's get into it with some principle, some easy principle, because this is just an introduction to the course. So the course aims to give you information mainly on technical analysis. So at the end of this course you should be able to know all the majority of the information around the technical analysis world and a little bit of fundamental analysis, the differences between those two analyses, but the main goal is that you get all the needed tools and information to become a trader and to trade by yourself. So this is the main goal of this course. Just be aware, please, that you need to study a lot. Nobody gives you money. You need to know as much as information you can know about a given market. If you want to invest in a market, you need to know as all the information possible. So just use internet. This is a good, powerful internet. We have got internet. Just Google it. Anything, information on a given market or that market that you want to invest money. It's better to do a little bit of fundamental analysis, called fundamental analysis, but we'll check it later in more detail. So this is just to let you know that please try to gather as much information as you can for the market that you want to invest money in, because technical analysis is a good tool, but it's better if it is supported by fundamental analysis, or if it's better that you know more and more about the market that you want to invest money into it. So where we can buy and sell these financial assets. First of all, where, and first of all, what is a financial asset? So in other words, how can we invest our money? So first of all, we need to explain the concept of financial markets. Financial markets are a place where traders go and buy and sell a different financial asset. So what is a financial asset? A financial asset, the main one can be a stock market, a forex or foreign exchange market, or commodity market, or cryptocurrency market. Those one are the most important markets, but there are others, many others. So again, overall, in other words, we need a financial market is where a trader or us, we go there. Is a place, it can be a platform perhaps, where we go there and we are able to buy and sell perhaps a stock market or forex market. So it means we are able to sell and buy stock, Apple stock, Volkswagen stock, or Microsoft stocks, or we are able and sell a US dollar and pounds, or any kind or any type of currencies. So financial markets can be seen as a big mall where there are different shops, and each shop is a stock market, can be a stock market, forex or foreign market, commodity market, or a cryptocurrency market. Those big malls, the main, let's say, financial centers are the Tokyo, London, and New York. There are many others. If you are more interested, please you can Google it. You see all you can check for the ranking or the most important financial market center, and you can see that the first most important one is the London one, and then just after New York, and then there is Tokyo. So those one are the most important financial market centers where the majority of trades, the trading exchanges happen every day, especially London, and then New York, and then Tokyo. So the most important session for now are European and American session. Both them, as you can see, I put some times that it's referred to the local time. So local time, so you need to switch your time compared to this one. This is local time in Tokyo, local time in London, local time in New York. And the best time to invest is when those two sessions are overlapped. So if you live in London, if you live in London, I think best time to invest is for sure in the morning, because London is the biggest one, so you will see a lot of volatility in the market, so it's good time for us to invest. But again, once as soon as New York jumped in the market, you see much more volatility, depending on the market that you are investing for sure. But those two are the most important. This one, it's not really as important as those two, but this one is why I just put those three one, because I just want to let you know, let you see, understand that you can really trade perhaps forex, mainly forex, 24 hours per day for 5 days per week. Stocks market are closed during the weekend, but starting from Sunday night, because the market center in Tokyo is already open until the perhaps if you live in London, so starting from Sunday night until Friday night or Saturday early morning, you can really trade all the currencies perhaps. So that's what, to give you an idea of the timing. And then from this one we can answer one of the most asked question: is it possible to be a part-time trader? I think if you live in the east side of the world, yes, because you need to be awake, or you need to trade when those two, at least one of those two, or even better, if those two are both of them open. If both of them are open, it's good time to invest. And this is because there will be more volatility. You can see those concepts for now, guys, but please read those concepts. We can talk later in the next lesson. So when those two markets are open, there will be more volatility, so more people is investing in it. So there will be the price, perhaps this is just an example, the price goes up and down faster in a time frame, define the time frame perhaps like that. The price against the mean price the prices move up and down with the bigger difference, between the top and the bottom, than a non-volatile market that moves against the mean price with the difference between the top and bottom very small or smaller compared to the volatile market. The idea is that if the market is not volatile like this one, it's the margin that we can get from this market is much less than from a volatile market. Again, please read those definitions. And then, what you can see, perhaps, if you open if you live in going back to part-time trading or trader, if you live on this side, you can do that, I think, because once you are off from work, you can start looking at the market in Europe, because it's when you are off from work, it's morning in the UK, and perhaps they are opening in next hours. The US market will open, so you can trade a little bit. You have a couple of hours for trading. But if you live in London, I think it's almost in Europe actually, in Europe time, it's very complicated. I believe this is my personal opinion. So if you live in London, because the most important time where there is high volatility, it's the times that you work. So it's if you work perhaps in the office, for sure, if you work from 8 a.m. to 4 or 5 p.m. as office work, it's, to be honest, it's not a job that you can do. But if you work in shift, like a nurse or like, I don't know, contractor, whatever, but you have a shift, perhaps you can do a part-time, you can be a part-time trading, as long as you will be trading when the market, there is more volatility in the market. So it means, again, going back to this one, when both those markets are opened. So I hope this has been clear. So you can be, at the end, as conclusion, we can say that you can be a part-time trader as long as you are able to trade during the openings, at least of one of those two main financial centers. So it means from 8 to 4 London time, from 8 to 5 New York time. That's all. Thanks. Thank you.